We have a story about the intersection of markets and sports, which is always interesting. The owner of the Boston Red Sox gets credit when his team takes home the championship here in New York. We hope that's not very often. But now he's also getting accolades for his investing. And, of course, we wish everyone well in that respect. Let's bring in Bloomberg's Kambiz Faroohar. He has written a story about Henry that will appear in Bloomberg Markets magazine and has been the most read story all day today. Everybody wants to know about this guy. You don't really know why, though, because he's such an interesting life from so many aspects. Let's, though, focus on the investment portion of his life. You know, we have a lot of guys on here who had a great year last year, but didn't do very well in the past. Is this another case of sort of wrong way bets paying off in the perfect storm year?
I don't think so. I think John Henry's been successful for 27 years. He's been putting a record of 22% a year return for the past since 1982. That's 27 years. He had 3 bad years from 2005 to 2007. But last year was a phenomenal year for him, 91% return. 91%
return after winning the World Series.
The year before that, in 2007, he won the World Series for the second time in 4 years.
So what were the bets that he made that led him to a 91% return? I mean, a lot of people, John Paulson, for example, Charlie Minter, did extremely well by betting against the U.S. economy, betting against mortgage-backed assets.
He looks for trends, for long-term trends. And last year, all his bets essentially came through, but primarily crude oil. He basically bet on the rise of the crude oil, and when it reached highs, as the crude oil tanked, so it went down from $150 to about mid-40s, he jumped on that bandwagon as well. So he rode a crude oil high, and then on the way down, he jumped, took a profit on that as well.
So 2008, a great year for him, following a great sports year for him in 2007. What about 2009? How does it look?
Well, commodity traders and managed future traders are all suffering this year because of the markets haven't shown any trends. So far, I think his funds are down about 5%. Which is about average along his peers.
Let's talk about the funds, first of all, how big they are, how people can get in on them, and what the kind of growth looks like.
Well, his funds used to be a lot bigger. He had $3 billion under management in 2004, 2005. Since then, he had 3 bad years, so he lost a lot of the money. He has about $200 million on his funds right now. And to get in, you have to be a qualified investor. It's like a hedge fund investing. And you can apply directly through him or through companies like Citibank, for example.
All right, so what's the future look like for John Henry as far as investing? I mean, has he got other funds that he wants to start? Does he focus just on this?
He only focuses on trend following, which is a system, black box trading, essentially. He doesn't predict where the money is coming from, where it's going to. All his bets is market trends. He has 4 funds, and he's looking at possibly producing more funds. But at the moment, his focus is to make sure these 4 funds are actually successful again.
The reason I ask is that this successful 59-year-old man is about to marry a lovely 30-year-old woman who has, I believe, a real estate degree, real estate development from MIT. So obviously a smart cookie as well.
Very.
Maybe he could go in that direction.
Well, interesting enough, the Boston Red Sox are developing real estate around Fenway Park, trying to expand on that. So there could be some potential, synergies going on there.
Synergies is one of our favorite words to use. Kambiz, thanks so much for joining us. We wish John Henry and his future bride the best. They marry this weekend?
Yes, they do.
I'm sure another home run there.